Hi, this is Alan Siebenaler from the Invest LA Group. So I'm covering the next point in my series, Building a Rental Income Portfolio. Currently talking about barriers to action for investors. And the one we're talking about right now is that high return always equals high risk. This is not true. It can, but it does not always equal high risk. High return does not mean that a deal is high risk. And let me just tell you a brief story about a poker player. So, hypothetical story, but happens all the time. So you have a professional poker player that comes in to the casino playing with $1,000. Let's just play with easy numbers here. $1,000 of his money, puts it on the table. Okay? Playing, a few hours go by, and he's up $1,000. Now there's $2,000. These are stacks of money right here. 1,000 of his money that he put on the table, and 1,000 of house money that he's up. What does he do with the 1,000 that he put on the table of his money? If he's smart, he picks it up, removes it from the table, and puts it right in his pocket. And now he's playing with just house money. So what is his risk? There's no risk. That's not his money. He's playing with house money. And so one of the formulas that we use is what's called cash on cash. And it's one of the most powerful formulas for determining how quick is it that the money I'm putting into this transaction is going to come back to me off the table so that I have no money on the table. If I have no money on the table, well then everything's icing on the cake in terms of this deal. So one way that we remove high risk is looking at what is our return and how quickly is our money coming back to us that we've put into the deal. Now there's a lot of other factors that go into buying right, but again, I'm just emphasizing that high return does not mean high risk. Some of the other things that we think about in terms of buying right is what I call a spread between purchase price and rental value or rental amount. And we like the purchase prices right now that are beat down. We like a low purchase price, and then we like a maximum rental value. We like to be in high demand rental locations. Again, minimizing risk. High demand rental location means that rent's going to be good and vacancy is going to be low. We want to be in a high demand rental location where we can buy for the lowest price possible. And that spread protects us. Let me show you an example. Right now I'm thinking of a duplex that we have. And this duplex, the gross income, each unit is rented for $900. So we'll say gross income is $1,800. Okay? $1,800 a month. All right? Expenses, we're going to just do simple numbers. I know the expenses are 900 and something, but let's just say expenses are 900 a month. Okay? And that includes in there reserves for maintenance and reserves for vacancy. Okay? Built into that 900. You're not spending that money every month. Some of it you're saving for if one of the units go empty or if the plumbing breaks or whatever, the manager's got to fix it. That's already built into that $900 a month expense. Okay? So we're netting $900 a month, right? So if we're netting $900 a month, again, we're talking about risk. It's a very good return. It's a very high return. So you would assume, well, maybe it's high risk. Well, there is such a huge cushion here because I have $900 a month net coming in, income. Okay, this is expenses, and this is gross rent. Okay. All right, so my cushion is $900. That means for me to even get to breaking even or losing money one month, I would have to have a major rent reduction. So if each unit is rented for $900 a month, I would have to drop $450, which would on each of them would equal $900 on each unit. That would be a 50% rent drop. So I'd have to see a 50% rent drop, which we've never seen in this rental market, to even break even on this property. That is the kind of cushion we look for. That is the kind of cushion where you can have high return but minimal to no risk. And those kind of deals we call no-brainers. And so that is why I do not agree that high returns always equal high risk. My name's Alan Siebenaler from the Invest LA Group. Thanks for listening. We'll cover the next one in the next video.